Hello, everyone. Dollar Vigilante subscribers get the special welcome to Ed and Mike's show. And well, it's not really a show; it's just a thing.
Work in progress.
Yeah, it's
Weekly update.
Yeah, it's our weekly update of markets and stuff that that we can share, and not behind a paywall. And so where are we, Mike? Are we going to go to war with Iran or not? That seems to be the hot topic that's driving everything.
Yeah. It's the back
the
and forth. I mean, me personally, I don't know. I don't know what's going on, but the markets certainly think we got peace in the works, right? So the headlines for the end of the week, markets started off the week on a bad foot. You know, they had a 3-day losing streak, but the end of the week with a sharp end of the week reversal. Dow made an all-time high, which it hadn't done, I think, since February. It was the top performing U.S. market. S&P is close to logging its longest winning streaks in 3 years. NASDAQ didn't set a new all-time high this week, but it did last week, and it got pretty close to it this week. Mm-hmm. So, yeah, the reversal happened kind of midweek when Trump said he wasn't, for the, how many times has he said this? I'm not going to bomb Iran today. We'll give him a chance to review a peace proposal. So he came out and said that. There's rumors that they're considering a peace proposal. And then, of course, we had the Senate voted 50-47 to advance the War Powers Resolution, which is aimed at withdrawing the U.S. from the Iran conflict. So I think that all culminated in the markets being bullish that there's going to be peace. But I don't know. Do you see peace? The other headlines I keep seeing is Iran's not considering giving up its nuclear. It seems like it's hardlined on that, and it's also hardlined on wanting to charge a toll for ships going through the strait, even after this whole thing is said and done. And the U.S. seems to be hardlined against those two outcomes. Yeah. So it seems like we've got the gap can't be closed, but the markets think it can be. What's your take on that?
Well, just as a recap, so last week Trump went to China and he got no concessions out of China, came back promoting how great the leader was. Xi is great man. And I think he got a couple hundred orders for Boeing,
which was a disappointment. They flag it as a success, but the analysts and Boeing, I think themselves, was expecting 500.
And he said a couple things that China's leaders came out later and rejected. I think there was a comment that Trump was like, no, Xi assured us that they're not selling arms to Iran. And China later came out and said, no, none of that is true. We never said anything like that. This guy, this Trump, Mike, my view on Trump is that he's really it's a bit of a unique view, I think. It shouldn't be, because it's not like there's a paucity of data out there about the guy. He's been in the news for 50 fucking years, and he's obviously, if there's one thing that you could say that he's good at, what would you say it is?
Bullshit.
Promoting, right? He's the best promoter I've ever fucking seen. People just slap it up. If obviously he's not going to convince people who don't like him to like him. But if you're like just the average guy and you're listening to Trump, he's a great promoter. He's a great promoter of himself, mainly.
Well, I say great bullshitter, which I think is similar to the great promoter, because
sure.
He's able to say things out of both sides of his mouth, right? He's able to talk both sides of an issue, and yet his supporters are unwavering, right. And because he's able to, anytime he spins something different than he has been, he's able to bullshit in such a way, promote it in such a way that nobody bats an eye that, hey, this is the exact opposite of what you just said to us.
Right. It's not like as if there's no evidence that he's lying or contradicting himself. Yeah. It's like the evidence is it's abundant, and it's kind of a mystery of our time. People they really want to believe that he's the savior. He's going to change things. But when you listen to him talk about what's wrong with this system, he winds the clock back to Obama or Biden, as if this story hasn't been going on for decades or longer. So I think that just shows his understanding is very, very poor about what has made America shitty, I think. So last week he went to China, okay? And I viewed that as him taking time off from the Iran war, which I think proved to be true. There was no
Yeah.
comment made about Iran or anything other than what he said China said about it. And so, but then when he came back, he was like, no, the Iranians are not making any sense. We have, I think he talked up the idea of going back in a little bit.
Yeah.
And,
More threats.
but, right. And it looked like, okay, well, they're going to restart the bombing campaign. They can't seem to come together on anything. He kept talking about this idea of of no nukes. Then the supreme leader came out and said, "You're not. We're not going to let you have our enriched
Yeah.
uranium."
It's a hard no.
Oil prices started to catch a bid. Then we hear that they are closer to a deal than we thought.
But
And
according to who? Like according to Trump? Like that's what I'm so confused of.
well, I think the war powers resolution has had an effect as well.
I think it was the big and but did you so that was a kind of a tricky thing too because then there was news today that I had trouble wrapping my head around. So apparently, so the Senate voted in favor of it, right? Which was a bit of a surprise. They had, I think, 4 Republicans vote for it. And so then the next thing for this to actually go through, though, is that the House, I think, needs to vote on it next, if I got that
I
right.
think there are different bills, Mike. I think there are different war powers resolution bills. I think the House is looking at a different set, and I think the Senate is looking at a different set.
Possibly, that it could be true.
I'm not.
And so from my understanding, though, that House vote was supposed to happen, I don't know, this week. And I think the Republicans got whiff, maybe because of the Senate vote, that they weren't going to win it. So they were able to just cancel it, I guess. But I think, from my understanding, it's not a real cancellation. It's still going to come, but it's been
Yeah,
postponed now
yeah. They
until
delayed it till after the Memorial Day week
yes,
holiday.
yes.
So to me, that seems to increase the likelihood that Trump is going to act before June 1st.
Act in what way? Like peace,
No,
aggressive.
aggress against.
But wouldn't that hurt his case though? Like because I mean, if the House does vote for this, that will be the end, right? That means that unless Congress supports, right, like that, it will be the end of the war.
Unless he escalates and flares up a war to such an extent that they'll be like, well, we can't really stop it.
But it would have to be almost like a retaliation. It couldn't be like just Trump bombing Iran. It would have to be like Trump bombs Iran and then they
It
retaliate.
escalates. Yes, it
Yeah,
escalates. And I think all of this time, the Iranians have the PR on their side. It seems like everybody's not that they think that the Iranians are the good guys, but they think that the Americans are sort of the bad guys. A
the
lot of
aggressive.
a lot of the consensus, let's call it. But I think that the Iranians, being the bad guys, have been using this time to their advantage and rebuilding. We're hearing news about that
Yeah, no, I've heard that. Yeah, factories back online, drones getting built. Yeah,
from the U.S. side. The
yes.
U.S. intelligence is saying that, and so Trump didn't like that. He called it treasonous.
Oh, I didn't hear that part.
Yeah, and I think that it would. So if Trump went in, I think it would be the escalation would be bigger than what we've seen so far. But the markets don't believe it. The markets are saying, are buying up, are buying Trump's line. And on the oil front, you could probably there was some news that
26
the
Chinese tankers went through the strait.
right, and the Americans were easing up on Russian sanctions, oil exports,
Hmm.
I believe.
Yes.
So I think that also kind of weighed on the oil price as well. So it's looking like as if the markets are like signaling that we're heading towards peace, and I think that's what we've seen this week. But it's again, so I'm not saying anything that you don't know or our viewers probably don't know. But this guy is so hard to predict,
Yeah. Yeah. I mean, it's just a
and
constant flip flop. It's getting, it's
and
almost tired.
sorry to interrupt, but it's annoying that we even have to game it. So
And with these prediction markets and everything, I feel like it's turned into a whole fucking sport, a whole like pastime of a big swath of the population just
yeah,
betting on what he's gonna do next.
yeah.
It's crazy times.
Yeah. So what do we do? I mean, how do we game it? I mean, one thing is for sure, you got the stock markets at record highs, and Trump keeps pointing to the Dow as proof positive that of the wonderful
Yeah.
policies that he's promoting in America. See, I'm making America great again. Look at the stock markets, look at GDP, look at the jobs reports, and
That's why he's Jesus. That's why he made a picture of himself as Jesus. He's the savior.
it annoys me that people think in terms of stock market performance and linking it to the politicians in the first place. As if compared to Biden's term, let's compare it to Obama's term. I mean, that's not the way to look at a stock market. It's not like as if politicians create the bull and bear cycles. The Fed does. And the Fed is not always aligned with every political group. In fact, I think most members of the Fed board are Democrats. So, they're not all, it's not as if they're controlled by the politicians. And, in fact, as you know, politicians are sort of a revolving door. They're the puppets. They're the gong show that we all watch. They're the entertainment. You can see that even as autocratic as Trump is, as authoritarian as he is, he can't get through a lot of the things he's trying to get pushed through.
Well, is he going to get worse to push through lower rates?
Say again?
Is he going to get worse to push through lower rates? What do you think? Got sworn in?
It's not totally up to Warsh. It's right. It's up to the board, and
Yeah.
Powell is going to stay on the board.
Yeah.
And he's probably going to fight Warsh. So we're going to see, I guess, how much power the president has. But obviously, you can foresee the script playing out. If the stock market trips up and crashes, what's Trump going to do? He's going to blame the Fed. He's going to say, well, it's because you didn't cut rates fast enough. You should cut rates earlier. And, then that's going to get set and fight some people on his side and some people who will try to oppose him. But the Powell side will be weakened by that, and they'll be like, we got to cut rates now at any rate, because that's their playbook.
That's all they know. I just found it was the media this week when it's talking about Warsh getting put in, and the Fed meeting minutes came out, and it shows that they're divided. A bunch of them are looking for hikes. All of a sudden we're talking about hikes on the table, and so it's just funny because the media just went nuts this week, and it was almost like they were trying to over sensationalize, just make it like a drama. It was almost like I was watching like a trailer for like a dramatic movie or something like that, right? Just really to kind of get the reader kind of engaged and enthralled, and that there's this big fucking thing going on between all these Fed officials, and it's so tough. What are they going to do? What are they going to do? I just think the whole thing is pretty funny.
I think it was aimed at reversing the sentiment that has been building for 6 to 8 months, where the Fed has dropped its promotion of lowering rates, where if you remember, after this last summer, they started, they started to recognize that inflation is stickier than it should be. So rate cuts that were planned started to lose support around the fall, and that's been the case ever since. So that's why we've seen bond yields rise. So, can you see the bond yields?
It's a lot of data. What do you want us to focus on?
Okay, right. So, just here.
Yeah.
These are the U.S. yields over 6 months, right? So since March, we're up almost 1% on the 10-year. How many basis points is this on the 5-year? From 3.6 to 4.3, so 60 basis points. And I think that's about the same, 50 or 60 basis points along all of these, except for the one that the Fed controls, the 3-month T-bill yield.
And that 30-year yield, it hit the highest. It broke 5.18%, and the highest since 2007.
Yeah, here's the longer term chart. So you see, when they started hiking rates, it peaked in 23 right here, but then fell, and then in the last, I guess, year and a half, it's been just ticking back up now, and especially in the last 6 months. So, like you say, there's a new high here. Far back do we have to go?
2007. Headline.
2007.
Yeah.
Yeah. So
and the Japanese yields too, right? They were some big movers. They set actual all-time highs. The 40.
Well, look at this. This is the Japanese yield, right? This is the result of their negative interest rate policy. When they did this, it boosted all the markets. Bit of a yen carry trade was put on, because you had yields at 0% or negative 25% if you could borrow in Japan. It's not like the yen carry. I think the yen carry is overrated. I think a lot of people think a lot more money is in that trade than there actually is, but it's still a thing. And look at this. I mean, this is the 10-year Japanese government bond, the JGB. When was the last time they were at 2.75?
1996.
I mean, it doesn't even go back on this chart. It only goes back to 2005 on this chart. 1996, eh?
Yeah, that's the headline I got. Yeah.
So trouble is brewing, and it's just a matter of the right catalyst, I believe.
Well, it's just, I think the thing that's really kind of getting me with all this information is, rewind 2 years ago, and, when we're dumbfounded at looking at these stock markets making record highs, when they shouldn't be, it was very much based on the Fed telegraphing that they were going to cut rates. So anytime there was this idea that the rates were going to be cut, the markets would move up.
Yeah.
Now it's almost like that kind of thinking about rates does not matter, because now we're in a situation where the expectations are that the rates are going to be raised, the cuts are off the table, and yet the markets are surging even higher. And it's almost like they don't care about rates anymore.
But that's what this debate about Warsh was about this week, in my opinion, is to reverse that tide of sentiment.
Yeah.
Right?
Yeah.
And so that might have supported the markets a little bit this week as well.
Possibly.
If you got people thinking, you made so much noise about it, even though you didn't say that Warsh is going to submit or the Fed is going to submit to the Fed, to the political powers that ought not be. Even if you said that, if you concluded that, they made so much noise about it, it's going to enter into some people's minds that, well, yeah, the Fed is probably going to just cut rates as Trump wants, But so going back to the Dow's performance here, I want to share this screen with you. I posted this on my Twitter account. Do you see it? Right. This is the Dow versus the Dow Jones World Index, and I made the comment that Trump keeps pointing to the Dow's performance, but the Dow has actually been a low-ranking performer on the global scale for the last year or so, ever since he got I guess this goes back to his inauguration in early 2025. So as soon as he came in, the Dow started to underperform the global averages.
Yeah.
And so now this is not true of the NASDAQ. The NASDAQ has been a top performer. It's not performed as well as Turkey or Argentina or anywhere else where I guess they have better presidents. But in any case, I think this graph tells a very interesting story. My opinion on the markets here. We've got increasingly, the averages are just so increasingly dominated by the
just a few select stocks.
The top 10.
Yeah, no, the mainstream is calling this out. The mainstream news is calling this
So
out.
Anybody who tries to own a mutual fund or a passive ETF, they can't avoid owning the tech stocks. Here's an irony: is that profit margins have been rising pretty sharply since 2008. Remember the chart that I showed in the newsletter?
Yeah.
But that puzzled me when I first ran across it. It puzzled me for a while. I was like, how come profit margins just keep rising? And, I thought about it. I did a little bit more research. Obvious. The answer is just obvious. It's really actually quite obvious, is that the economy has undergone some real big changes in the last 20 years. And one of these changes is the one that Trump is trying to reverse. Is a lot of manufacturing and a lot of heavy capital intensive industries have moved offshore.
Right. Right.
And the reason they've moved offshore is because it's not profitable to operate in the US. There's too many regulatory hoops that you have to jump over. The unions have the protect labor. It's all because of protectionist policies of the past. And so that's why it's interesting that Trump just adds protectionist policies, even though that's one of the reasons that the manufacturing and capital intensive businesses have become less profitable. But so the increasing profit margins is due mainly to the transformation of the economy from this manufacturing base to a more technological economy, finance and technology, and the including platform companies and whatnot. So I don't know if that's good or bad. A lot of people will have an opinion about that, but to me, the market is the market, and to me, it's if that's where the profit margins are, and that's where profit-seeking entrepreneurs are aiming, then they're satisfying consumer wants to some extent or another. It's to me that's the irony is that Trump wants to reverse that. So he wants to onshore all these unprofitable operations, and yet he wouldn't assume that that's going to undermine the stock market's performance.
No.
But it would, because the stock market's performance is directly tied to this transformation that has followed where profit margins are expanding, and so with this massive domination of tech companies, of the averages, and the almost impossibility of investors to avoid owning tech stocks if you want to own stocks, that's troublesome. Even though you could say that, yeah, sure, the AI is delivered a productivity miracle of some sort. No, it has. I mean, it's still not where it should be. But the internet wasn't where it should be in the late 90s either,
No.
but it still delivered the productivity shock to the system. And it'll still take time to make full use of the AI, but still, like, you want, the critics will say, well, the only reason the tech companies are making money is because the investment in data centers by the hyperscalers is what they call them.
Mm-hmm.
The spending by them has increased the profits of all the other companies that are selling the equipment to the data center build out. But those companies, those hyperscalers, are among the leading earnings generators as well. So they're making money, even though they're maybe not on the data centers, but they're making money in the development of the cloud and other areas of the internet. They're still making money, and I think that we underestimated that. I think that's definitely a real factor behind why the stock markets keep making new highs. But I think definitely the concentration or the of the top 10, the low breadth of the advance in general, the monetary backdrop, the geopolitical risks, all that other stuff is not priced in. So the market has some justification for what it's doing, but I think it's not properly pricing in all the risks. And the liquidity situation is definitely a factor that's going to tip the scales sooner or later. It's just we need to see a catalyst of some kind, and I think we're going to need to see it in the tech sector. I don't know if we're going to. I think that it seems like the market is pretty much committed to buying every dip that's caused by geopolitical concerns or.
Well, especially after this last, like, I mean, just looking at that V shape in the charts right from the last dip,
Yeah.
Yeah. No, if it dips again, I everyone's gonna be like, gotta get in. I don't want to miss the next rally.
Yeah. Which is getting to the point of irrational exuberance when people start buying stocks just because they're going up.
Yeah.
So, that's the bubble part. We have the unsound boom, which is the incentives behind the overspend on data centers, and we're seeing the bubble in terms of the psychology of investors. So, but we're not seeing the monetary support. This week's noise about what's going on at the Fed, I think, is more important than maybe a lot of people would attribute.
Yeah, you might be right. I don't know if they raise rates though. Can't see that being good.
No, if there's any, they're right now, you're right. They're just hinting at the possibility that all the rate cuts that were planned are probably off the table. They're not saying that for sure, right? Are they?
No, they're still leaving ambiguity, and more so in the States too. What I'm finding is that the rhetoric coming out of like the ECB, for example, is leaning toward rate hikes. They're
Yeah.
still trying to be a little bit, we don't know, we got to wait and see, data dependent kind of thing. But the officials are, some of them are like, we're going to need to be hiking. Where I feel like the rhetoric and the last FOMC meeting minutes, there's definitely, people at the Fed
Yeah.
that are not as hawkish.
This whole thing reminds me of the 1987 stock market crash. And the reason I say that is because the crash was precipitated by two factors that I remember. They blamed it on program trading back then. And I think because of that crash, they created the plunge protection team, the PPT, the shadow banking committee that now because they created the fiction that the market system is just unstable. It's inherently unstable, and all this program trading that came in '87. I mean, that was like what 40 years ago. I mean, compared to the program trading that exists today, that scale in the early '80s was nothing. So the real causes, in my opinion, besides the fact that going into that, you had three causes. The bond market was falling apart, as it is now.
Yeah, one, yeah.
And the bond market was for about almost a year ahead of the 87 crash. It was just diving. And I think it was down 25, 30, or 40%, the 10-year, the price, the value of the 10-year bonds.
The price.
Yeah. And that was going on. And then there was a new Fed chairman coming in, Alan Greenspan.
Yeah.
Right? And then Alan Greenspan said and people assumed at that time that Alan Greenspan was a gold bug because he hung with Ayn Rand and crowd and the objectivists, and he wrote famous essay that he sort of copied. Greenspan did a take on that, where in Ayn Rand's book, he contributed an essay to the book where he wrote that the welfare state was the purpose of the gold standard was to shackle the welfare state and so forth. But there was a small spin in that article where he painted central banking as becoming sophisticated now.
Yeah, sophisticated. We have the tools.
Right. So people were expecting him to be a gold bug when he was announced as Fed chairman.
Hawkish.
Right. So that was another factor.
Yeah.
Then he mentioned the dollar when he shouldn't have. These days maybe it's not such a big deal for the Fed to mention the dollar, but in the last century it was taboo. The Fed would never mention the dollar. It was the Treasury's job to talk about the dollar.
Okay.
And so, but in being a noob to central banking, he mentioned the dollar when he shouldn't have. And the central banks were in the same position back then. And the European, it wasn't the ECB back then. I believe it was the Bundesbank or one of the European, I think it was the Bundesbank, decided to raise interest rates, So we're in a similar predicament where the ECB today is thinking we got to raise interest rates, but if they do, they're going to undermine the dollar and they're going to undermine the global boom, and they're going to put into people's minds that the possibility that the U.S. is going to raise interest rates. At the same time, we have a new chairman of the Fed, and we have a bond market that's falling apart. So it's like 1987 all over again to me.
Yeah. It seems like the central bankers are getting really painted in that corner more so now than ever with the impacts, especially with inflation still going.
Yeah. And, and this is the thing, if we had sound money, so no central banks, and we were on a gold, doesn't have to be a gold standard. If gold was money, that's the best way to say it. I don't like the idea of a statist standard on anything. But if gold were, if we had a sound money, if the markets operated off of sound money and there was no central bank to intervene in money supply or interest rates.
Yes.
Okay. If that was the case, and you had a massive increase in the oil price like we did today, other commodity prices would fall.
Yeah, so it would balance out.
Right. And
it would be a signal, right?
It would be like the market signal would be to produce less of the other stuff and produce more oil. So it would fix the problem a lot quicker because the incentives would be so much more acute.
Yes.
So, but in today's world, it's the rising oil price with central banking being what it is, all the other prices follow, right? Maybe to a lesser extent or whatever. But in any case, it slows down that fixing process, right? It slows down what is the saying? Higher prices in commodities, higher prices are the cure for lower prices or something like that, whatever it is. And vice versa. Low prices are the cure for low prices. It's a bit of what's the word I'm looking for?
I don't know.
Tautological. It's a bit of a tautology, let's say. But so yeah, I just wanted to point that out because we don't live in a world of sound money. We live in a world where
No, the market signals are all distorted, right? They're all distorted.
Right. Sorry to interrupt you, but where the price, whereas the markets would fix the problem, the imbalance, automatically, we look to the central banks to fix the problem. And so, but the central banks, when they try to fix that problem, they're just going to create more instability. So I don't know. I hope you say again.
The interventionist spiral or something like that. I think there's a
Yeah, it's just ongoing. It's like lying,
Yes. The more lies you tell, the more lies you have to tell. That's just the way it goes.
So let's wrap it up, guys. It's 40 minutes, and with respect to your time and ours, we'll see you next week.
Yeah. Till next week. See you guys.